All right, so we are at the top of the hour, so we can go ahead and get started. I want to thank everyone for joining us for September's edition of Let's Talk Fraud, your quarterly deep dive into what's happening in the fraud within the financial industry. Before we get started, a couple of housekeeping items. So all participants are muted to avoid the background noise. If you have a question throughout the webinar, use your Q&A feature at the top of your screen. You can chat them in and we will leave time for questions at the end. And then the recording and presentation will be sent out within 3 business days to whatever email you use to sign up. So you will get a copy of that. So we'll move along here. All right. So today's presentation will be led by Allied's very own experts in fraud with a combined total years of 85 experience in the financial and fraud space. Please help me welcome Allied's Vice President of Risk and Consulting, Ann Davidson. Ann is a nationally recognized expert in risk control and risk management. Her work and research have helped to increase awareness and sound risk prevention and response measures. Next, meet Regional VP of Bond and Risk, Joette Koletz. Joette holds several certifications relevant to credit unions and risk management, and her uses her insurance and risk management expertise to help financial institutions manage risk. And rounding out today's presenters is Director of Bond and Risk Management, Zachary Douglas. Before joining Allied, Zach served as a fraud compliance and BSA legal and security expert for Central Florida Credit Union. Today, Zach specializes in risk management consultants and helps financial institutions reduce their probability of losses. So I want to thank you all for joining today's webinar, and I'm going to send it over to Ann for our agenda and our 90-day look back.
Thank you so much, Caitlin, for everything, and thank you to all the financial institutions that have joined us today. Our agenda, we have a very busy session today, introducing, a look back, the 90-day look back. What have we seen in the fraud and risk arena? We're also going to talk about, Joette's going to talk about litigation trends. Joette will also talk about the ATM and the ITM physical attacks that we're seeing across the industry. Zach will talk about new account fraud, and then I'll round it off with payment fraud, and then it's up to all of you to open it up for your questions, and we'll try to provide you an answer to those questions. So with that, what are some of the current state of fraud that we have seen? And again, this is a 90-day look back. We continue to see card not present fraud, mainly with the internet online fraud exposures. Those bad actors are out there every day trying to perform those transaction activities. We continue to see card present fraud. You're probably scratching your head saying, whoa, wait a minute. The chip was rolled out back in 2014. Why is there still a lot of card present fraud? We're going to be talking about that later in the presentation. A new trend is the digital wallets. We are seeing fraud in the digital wallet arena, mainly with, we're seeing Samsung Pay. And just to give you a little background, we also have Google Pay, which is formerly known as Android Pay, and then you have Apple Wallet. So those are areas to keep your eyes and ears open to, because the bad actors are definitely going down the digital wallet arena. New account fraud. Zach is going to share some great information on the new account fraud. Every day, there's not a day goes by that some of you on this call today probably see the bad actors getting in online or in branch. So that is not stopping. It's really exploding. Then we're seeing check fraud. Check fraud is an area of 40 plus years. Those bad actors, they love the paper checks. Well, guess what? They're back doing it today. They continue to wash the checks and alter those checks. So that is what we're seeing in the check fraud arena. And, we're hearing that they're breaking into, some of the postal's mailbox, the blue mailboxes, with the keys. And we'll talk more about the check fraud, and hopefully we can hear from some of you if you are seeing that and experiencing that. P2P, person to person, ACH. That's not going away. It's what we see is the online banking piece of the Venmo, Zelle, Cash App, and Apple Cash. We're also seeing it with the app, you know, those apps when your members download that app. So ACH fraud is right at the tip of the iceberg. It's not reducing, it's exploding. Card bin attacks. We've heard from many of you on these card bin attacks. Some call it a brute force attack. It's one and the same. I probably saw these bin attacks 30, 40 years ago, so I scratch my head and say, they're here again, and why are they happening, and what can you do to prevent those bin attacks? So a key takeaway, make sure your card numbers and your expiration dates are not in sequential order. That is a key element there. ID theft, again, new account and account takeover. It is not stopping, and I can't tell you a day goes by that we don't hear from one of you on the ID theft. And then litigation. Joette's going to share with you all the different litigation areas that we're seeing, you know, suits being filed across the industry, you know, Fair Credit Reporting Act and some others. So with that, let's get right into what's going on with litigation trends, Joette.
Thank you, Anne. Yes, I want to talk about our top litigation trends and offer some ways that you can mitigate these types of lawsuits in your financial institution. These types of lawsuits can really be very expensive, so the severity of the loss can be quite high. We've been seeing, number one, really since the first of the year, and they're not getting any better, wrongful termination lawsuits. Employees are alleging that they were terminated, whether it be fired or laid off for legal reasons, such as discrimination because of race, age, gender, family status, pregnancy, religion, national origin. The employee, in some situations, when the employee is replaced with someone that is not of the same protected class, such as like a 62-year-old employee was replaced with a 32-year-old, they feel that there's reason to file suit against you. A female employee maybe is permitted to work from home, but a male employee in the same position is not. Also, accusations of disciplinary inconsistency. The terminated employee was involved in the same act of misconduct as another employee that was not terminated. The terminated employee is accusing his manager of singling him out. Also, that an employee had excellent performance reviews for several years, and then there's no mention of needing improvement, and the employee is terminated for performance. It's very important. We're seeing in credit unions that in a lot of cases, the policies and procedures are very good, but perhaps managers aren't trained, or managers don't follow through with what they should be doing in the credit union. So it's really important, if an employee needs to improve in a certain area, don't wait until the formal review or termination to let him or her know. Discussing an individual's weaknesses in a constructive way can be quite a challenge for some, but it's extremely important. And give the employees examples of how to improve. So you're pointing something out to an employee, and you need to point it out right away when it's occurring. And make sure everything is documented. Document what your expectations are for that person to improve. Timelines, are you giving them 30 days to improve, 60 days as an example? And then follow up with the employee and discuss and document the required performance improvement or no improvement, and make sure you give that employee next steps to follow. I want to show that it was the employee's performance, their conduct, and not because of a protected class status that was the reason for termination. Document, document, document. If you're facing a difficult termination decision and you're unsure, it's really important to engage legal counsel to determine the best plan of action for the specific circumstances. And prior to termination, be sure you talk everything over with legal counsel. You know, as it states right here, termination should not be a surprise. We're still seeing overdraft class action lawsuits. This has been an issue and it's not getting any better. What's happening is attorneys, because you see the same attorneys a lot of times, attorneys are trolling financial institution websites in search of inadequate account agreement disclosures. And a class action lawsuit will ensue since all account holders who were charged perhaps NSF fees during the discovery period, they're included in the punitive class. We really encourage you to remove your account agreement disclosure from your websites. We don't want to make it easier for these attorneys to find this information. Review your account agreement disclosures and make sure that it matches what you're doing. It needs to match your practices and procedures. Disclosing the precise manner in which you are charging fees, as an example. Specifically disclose if you're charging additional fees for resubmitted items. These are some of the common accusations. Use descriptive terms. Per presentment, as an example, for every time any item, check, ACH, debit, or any method of payment is presented for payment. It's very important to avoid terms that are ambiguous. State that transactions authorized on a positive account balance can incur overdraft fees. Explain how the account balance is calculated to assess fees for pending debit card transactions. So these are some of the common accusations, and these are some of the best practices that we can provide. And I do want to say too, with each one of these and mostly everything we're going to talk about, we do have risk alerts available for you that will give you some more information, and we do have resource papers and other information. So please be sure that you're signed up for our risk alerts, you know, especially with these subjects that we're talking about today, these high loss areas. The final litigation trend that I want to touch on today is the Fair Credit Reporting Act. Financial institutions are being served and investigated by consumers' attorneys asserting Fair Credit Reporting Act violations. The violations really are pertaining to not investigating or an inadequate investigation, inaccurate reporting consumer information, pulling a credit report not for a permissible purpose, and inconsistent reporting to all the different credit reporting agencies. So it's really important as far as investigating and responding timely to disputes. Conducting the investigation in a timely manner is critical. It's ascertained that the financial institution has 30 days to investigate a dispute and respond to the affected consumer. Notifying the credit reporting agencies when an account is being disputed, you know, so letting the agencies know that an account is being disputed and it's in the process of an investigation. Accurately reporting consumer information. It's very important to ensure that the information that you're reporting is accurate. Updating the consumer's information timely. Ensuring information is updated and correct after an investigation. Making sure that if an account is paid in full, that it is closed, it's updated, it reflects that zero balance, you know, with all of the reporting agencies. Understanding permissible purposes of consumer reports ensure that you have authorization for the individuals for a loan in any connection for a loan. If you're reviewing a loan to determine that you want to continue a line of credit, or if you're pulling a credit report for employment purposes, make sure that it is permissible. Consistent reporting as well, that you're consistently reporting that same information to each of the credit reporting agencies. So that about covers the top litigation trends that we're seeing. The next thing that I want to talk about is ATM ITM attacks. This is still a problem. It's been a problem. We started to see this last year, and we think we got a handle on it, but we're still getting more losses and claims from financial institutions for this. So it's the physical attack on the ATM. The standalone ATM and ITMs that are located in the drive-up islands, usually it's that last drive-up islands, this is where most of the claims are occurring. So that's the most vulnerable area, it seems. And most of the claims that I review, that's where they're happening. And these crimes can cause significant losses, since it includes property damage, damage to the ATM, ITM itself, and then theft of cash that's in there. So even unsuccessful attacks can cause a tremendous amount of property damage with a destroyed ATM or ITM. And most of these attacks are being caused by what is referred to as hook and chain, smash and grab, but it's the hook and chain. So thieves will use any type of construction or heavy-duty vehicle to wrap a chain around the ATM or ITM with a hook attached to the vehicle and drive off at a high rate of speed. The vehicle pulls and rips the entire ATM or ITM from its foundation, and later they work to open the unit off-site. Most of the vehicles used in these types of attacks are stolen vehicles. So one of the key things, so what can you do? Well, ideally you want to have that ATM or ITM like encased, bollards, barriers. So, it's really hard to get to. Something else that we're really finding is to be sure you have installed what's known as a safe slot reinforcement kit. What this kit does is it removes all available space surrounding the dispenser, deposit, aperture, and reinforces that area around it. So it will make it more difficult for a hook to go in there. So there wouldn't be nothing, it would be harder for a hook to grab on to secure that ATM for that bad actor to pull it out. Some of the other things that we suggest is if you cannot make it an easy runaway, if somehow you could put plants up or like some of those decorative rocks or something, some way that it's not an easy runaway, because that high rate of speed is really what helps that bad actor rip it out. As far as protecting the cash inside, some credit unions have put in like GPS devices to track the money, or ink staining, but that's after all this destruction has been done. It's just that then the money, they may not be able to use the money if it's stained. But some credit unions have told us that they've just put a sticker on the ATM saying that they use ink staining, and that's helped to deter against it. Whatever you can do so that they're going to drive by your ATM, ITM, and go down the street to another ATM that you're not responsible for. A well-lit area is really important. Something else that you could consider doing is an alarm, a loud exterior alarm, or strobe lights. Something to really distract that bad actor from doing anything. Cameras are important, and also look at the amount of cash that you're keeping in the ATM or ITM. Do you need that much cash? So you could at least reduce your exposure that way. But the key here is, I offered you some suggestions, told you really what's happening. I mean, they do pull them out of walls. They do pull them out of, like if you have them in like a convenience store or a hospital. There was a case where the bad actors posed as repairmen, and they walked into a hospital, put the ATM on a dolly and wheeled it out with no questions asked. The credit union was not allowed to anchor it in place, so they felt that it was safe in a hospital. But nobody questioned the bad actors because they looked like they were repairmen and knew what they were doing. So it's important with this information to talk with your ATM or ITM vendor and make sure, discuss, what can you do? What additional steps can you put in place so this doesn't happen to you? And now we're going to send it over to Zach. Zach's going to talk about new account fraud, which is a huge problem as well.
Thanks, Joette. Yeah, as you mentioned, another hot topic we've been seeing in the last 90 days is the new account fraud. So bad actors are looking for institutions that have weak controls. They want access to as many channels as possible so that they have choices of how they'll commit their fraud. At the time of new account opening, they may ask your MSRs or your agents that open the accounts probing questions to try to figure out if your institution has any weak points in your controls that'll make fraud in a certain channel easier for them. They might ask about your check hold procedures, ATM deposit capabilities, remote deposit. If you instant issue plastics, they'll ask about your overdraft program and if they're able to overdraw their account immediately. And another big one is the access to ACH transfers online. They want to get into your institution, find out the weak points, and they will likely communicate with other bad actors. So you'll see these things come in waves. And with online account opening, the credit union industry wants it to make it easy for everyone to join the credit union in as few steps as possible. However, this also makes it easy for bad actors. So it's a balance between member experience and loss prevention. The goal here is to deny access to the bad actors to your credit union. A little bit of review up front can save you thousands of dollars in fraud losses on a single account. Some best practices that we recommend are reviewing the credit reports. It should be no surprise, but derogatory credit is an important indicator for fraud. Beyond just the score itself, there's multiple data points that are useful in spotting fraud and identity theft. Take a look at the addresses listed on the credit report. Do they match up with what was provided on the application? Do the timeframes provided match up with what they provided? Are there multiple aliases listed on the credit report that don't make sense? Check the number of inquiries. As I mentioned earlier, bad actors will attempt accounts and loans with multiple institutions in a short amount of time. Once they start the fraud using a stolen identity, their time starts ticking, so they need to move fast. Pay attention to any fraud alerts and warnings that are provided by the credit bureau. There may be notes placed by consumers to call them prior to any accounts being opened. And take a look at the Social Security issue date. Make sure that matches up with the date of birth that's provided. Using knowledge identity questions or knowledge-based authentication is good to try to verify that you're dealing with a legitimate consumer. The purpose is to identify the person. Ask them a set of questions that should be easy for a legitimate consumer, such as what color was a car you financed, or which of these street names pertains to you. If someone fails these questions, it's wise to refer that person to the branch for an in-person opening. If the information provided doesn't match up or they fail the identity questions, it could be identity theft or synthetic identity theft. The Federal Reserve has a really good interactive tool to train your staff what to look for at account opening. There's a link at the bottom of the risk alert we put out in July, so look for that. And with the identity theft, you may have noticed a downturn in identity theft cases at your credit union during the pandemic. This is because many fraudsters shifted gears towards, the CARES Act related programs, SBA loans, PPP loans. However, now that these programs have concluded, we expect that there will be an uptick in identity theft. This is especially because large cybersecurity breaches that occurred before, during, and after the pandemic, the bad actors have had time to go through all that data and build strong profiles that are ripe for identity theft. You want to make sure that you're training your frontline staff of what red flags to look for on applications and credit reports. Teach them about the probing questions that bad actors may ask. Make sure they know who to notify if they do spot trends or have possible issues with an application. The frontline staff acts as your eyes and ears for a lot of fraud functions. And it may be wise to recognize them if you have a teller who is stopping a lot of fraud. Check your own records. Make sure that the person who is applying doesn't have an existing account that's in the negative or charged off. You don't want to be victimized by the same person twice. Take a look at the application. Make sure that the individual actually does qualify for membership at your credit union. Look for any suspicious information such as phone numbers with repeating or sequential digits, or questionable employment information such as inflated income that could affect underwriting decisions. And another way to deal with this is using risk scoring. Some credit unions have different programs for credit struggling members, which limits their access to higher risk activities such as the plastic cards, online banking, remote deposit, or ATM deposits. If you do end up opening an account for a new member, some best practices that we have to reduce your exposure are flagging the new accounts. In our experience, most fraud does take place within the first 6 months of account opening, so we suggest using a flag for at least that 6 months. It gives your frontline staff visible cues to use caution with transactions, review the history. They can also use it as a member experience opportunity. Make sure that the member understands the account if there's any questions that they have. Use appropriate check holds. Using strong check holds limits your exposure to check fraud. Regulation CC does include the new account holds for the first 30 days. After that, don't forget about the exception holds. If tellers are uncomfortable with checks, have them try to reach out to the other financial institution to try to verify the check. Some institutions may be reluctant to disclose information. However, in my experience, if you're able to get into contact with a fraud department or a risk department at institutions, they're generally more willing to help. With the account funding, make sure that you understand the risk of funding new accounts online, especially through ACH origination. When you act as the ODFI, or the originating depository financial institution, you warrant the risk in that transaction. So if it's unauthorized, you will have to return the entirety, even if the member has depleted those funds. Consider implementing low daily dollar limits based on your institution's risk tolerance. And finally, you want to make sure that you have a fraud detection system that monitors for fraud across all channels. A partner that we work with is Toolcase, and their informant system uses AI to learn patterns and detect fraud. The real-time fraud system lets you recognize fraudulent activity sooner so that you can institute controls to prevent similar fraud. Now I'll pass the mic over to Anne, who will cover payment fraud.
Thanks, Zach. And let me just piggyback on what Zach just said about Toolcase.com. They're the ones that brought the check fraud to our attention and talked about the master mailbox keys, getting into the, blue boxes, And we are seeing what we've heard from some of you out there. You have indicated to us that on the on-us side, before I get into the card loss, I just wanted to give you this brief on us. The bad actor is coming into your credit union with on-us items that they stole out of the post office, and they are cashing those over the counter. And if you do immediate clearing of your member's account, in one case, the member wrote the check for $31. It was washed, and the check, 3 checks came through at $3,100, and the payee was washed as well. So maybe educating your members not to, maybe they don't leave the mail out at their own street size post office box, bring it into the actual post office itself and put it in their slot so it's actually inside the post office. Maybe pay bills and everything electronically, through bill pay. Also, if they are writing a check, tell them to use a gel pen, tell them to use black ink. And those are some key things. So if you're seeing check fraud, let us know. Now I'm going to jump into the card losses, because card losses are not going away. How many of you on this call today are seeing your card program, debit or credit, or if you're still offering the ATM network card programs, what are you seeing? What's involved? So we're going to share some information with you on this as we go forward. So the card present fraud, I mentioned that with the chip technology, with that chip on the card, some of you are moving to the, the payment wave on the card, the Wi-Fi symbol. So you're having a dual purpose card, with that authentication in there. So how does the credit union, how do you identify card present fraud? And I thought this list of questions might help you as you work with your card processor or your core data processor, or like Joette said, reach out to us. What type of card present fraud are you having? View your authorization codes for card present fraud, because that will help you identify, like, just as an example, an 05 is chip on chip. A 90 is Meg Stripe, key entered face to face is an authorization code of an 01. So understand what those codes mean. Ask whoever's doing your chargebacks, if you're doing them internally or if you're using a third-party vendor or a card processor, find out why. Why can't you charge it back? And like I said, confirm if the fraud is the result of, is it a point of sale fraud, or is it at the automated teller machine? Is it due to fallback that they're bypassing, the chip? And then on the right-hand side of the slide, how can my credit union prevent card present fraud? So I just wanted to give you, so when you get this slide deck, it will give you information to go through and do your check boxes to see what are you doing. Is it fallback? Where is the fallback? What are your daily dollar limits? How are you monitoring, this fraud? Are you using a holistic solution to see what's happening here? And the key is it in real time? That's what I love about Toolcase. It's real time. It's a real time solution. And then confirm those codes and what do you allow and what don't you allow. So that's kind of a high level in the card present environment. So we will jump into card not present. This is a huge, huge uptick. In the last year or so, we have seen so many of you experience card not present fraud, and it started with the pandemic. How does my credit union identify card not present fraud? People, you couldn't go into the brick and mortar locations, the merchants, so everybody was shopping online, using your computer or using your mobile device. So you really need to ask, what type of card not present fraud is my credit union experiencing? And then again, understanding those authorization codes. I have talked to many of you, and it's like those codes aren't being shared, or they might be not the right code for the situation that you're experiencing. And so that's why it's always really key. Tell me why I cannot charge this back to the merchant. You really need to understand that. And then like on the right-hand side is, again, how can my credit union prevent card not present fraud? You know, the card environment is so complex. So to strip it down and really give you some key bullet points, that's what the right-hand side is really look at your authorization strategies. You know, confirm the available chargeback rights. The 3D Secure, I just saw something today. One of the card processors said, oh, 3D Secure has prevented billions of dollars of card fraud. Well, are you using 3D Secure 2.0? That is ever so critical. You really need to be on that 2.0. And in that third bullet there, see, check the green path, yellow path, or red path. You know, find out the green path, are the bad actors getting through? Is it a weak authentication there? The fraud monitoring, see if that's catching some of your fraud and preventing it. And then, like I said, is the one fraud, you know, again, ask more than one fraud authorization. Ask why. Why is this happening? Why am I seeing multiple transactions on an individual cardholder account? That's ever so critical. Why didn't my fraud monitoring system stop it? So that gives you just in a nutshell some high levels with card present and card not present fraud. ACH is the other area where it is continuing to explode. And I thought this diagram would help with the ACH fraud exposures. You know, the payment apps with when your members are downloading the Zelle, the Venmo, the Cash App, Apple Cash. And if they happen to use ACH there, that's a risk exposure. Again, you're acting as the ODFI, the originator, you warrant that risk. If they're using a card, you can charge it back. So understand that difference there between ACH and cards. Account to account fraud, we continue to see that. The person to person, that's where the online banking has really pushed the Zelle and Venmo and Cash App on online banking. Zach had mentioned online account opening. How are you funding that with ACH? The online banking with, are you allowing ACH credits going out the door with no authentication? ACH debits, what they'll do is internal transfers from that online banking into a debit card. Watch the bill pay, find out, you know, how are you liable there? And then in-branch account opening, again, the funding of the ACH. So this is just more of a diagram as you go through and do the slice and dice and find out what your policies and procedures are. We thought this would be a good tool for you. So what are some of the ACH fraud scams that we're seeing today? Again, they're coercing your member to participate in the scam. They're pretending like they're your financial institution. And we're seeing a lot of that with the payment apps, where they're transferring that ACH credit into another account at the receiving depository financial institution, and then removing those funds faster than we can imagine. We saw a lot of this with the unemployment funds, the unemployment fraud. And then just to give you an idea on the ODFI, are you an ODFI? I hear from some of you, you go, oh no, we're not an ODFI, but we bring payments in. If you pull payments in from the RDFI, you are an ODFI, an originating depository financial institution. The real kicker is are you ultimately liable? You know, so we see the ODFI and the ACH credit sending money out, the ACH bill pay, the ACH debit bringing money in. So those are the key areas to really target and watch for and see what authentication layers do you have in place. So on the right-hand side, again, some of the cures here. I'm not going to go through each one of them, but like the second bullet, dollar amounts is ever so critical. I talked to a credit union yesterday and they said they had, I think it was 15,000 and 5,000. Joette was on the call with me and they had no daily dollar limits in place. So that was ever so critical. look at name matching, even though NACHA does not require name matching when it comes in as an RDFI, a receiving depository financial institution. There's no reason why you can't match the names. That's your call. And then the bottom bullet is ever so critical. Educate your account holders and employees on this type of fraud, because as you know, more people are going to that digital world and using the routing and account number in all these different environments. So it's huge out there. The ACH credit fraud, again, find out the biggest thing here, using online banking to send that ACH credit to the receiver. And then, like I said, the Zelle, Venmo, Cash App, that's supposed to be friends and family only. Friends and family only. And then look at, I did give you a couple additional bullets. The last one on the left-hand side is that merchant category code to watch for money transfers. So run a report, see how many money transfers you have going out in the card not present world, and can you charge that back? I just had a credit union today. They had over 35 transactions. And a lot of the chargebacks, they cut it off. You can't go beyond the 35 transactions, and they had over 90,000 in losses. On the right-hand side, the online ACH credit, sending it out to the RDFI, find out, what are you doing for authentication? The second bullet is ever so critical. And the bad actors out there, like I said, they continue to phish. They continue to do credential stuffings to get the online credentials to sign into online banking, or they get into that dark web. So just be aware of this that's going on. Payment apps. I hate to talk about payment apps a lot, but just so you understand, payment apps is really hot today. Consumers love it. And are they doing it through your online banking? Are they doing it through downloading an app? Are they using their routing and account number? Or are they using their debit card? So these are things to find out to help you manage that risk. So what are some of the key questions in fraud prevention? This is really a takeaway document to help you when you receive the PowerPoint. Look at your proactive authentication measures. Make sure all departments are aware of this. Make sure that each department is aware of the layers attached after the fraud occurs, and then confirm that that the tricksters or the bad actors, what are they going to plan next? What information do they have out there? So that's ever so important. So what can we do with members? I just wanted to mention to you, and we can share more with you. We have a standard member education video. There's no cost to that as a bond policyholder. If you want it customized, there is a fee associated with that, but we did want you to know that we have heard from you that you need more member education information. So we do have that video clip for you. Some of the key things is monitoring the accounts daily. Make sure all your members are signed up for these text alerts. Maybe you have them all signed up and then they have to opt out. Create these campaigns. So that's what we tried to do with this video clip, is creating that campaign to share with you that video, and you can use it at your leisure, however you feel fit. And then identity education, letting your members know not to leave stuff out, maybe not to leave their checks out at their mailbox, or, flagged where they should put it. So education with our members today is extremely critical. So I know we covered a lot of information, but with that, we're going to turn it over to Brandon for questions from all of you. So thank you.
Good afternoon, everybody. I do have some questions that were sent in advance, and I'll get to those first. Just a reminder, if you want to go ahead and reach out to one of our risk managers now, use the Q&A function. I'll see that and can get those forwarded. So one that did come through, and I just thought was interesting, as Joette, you were talking about Fair Credit Reporting Act, and they asked if they're required to report to all three bureaus when it comes to any kind of late payments and things like that?
Yeah, that's a good question. You're not required by law to report anything to credit bureaus. And since you must pay to report information to the three major credit bureaus, Experian, Equifax, and TransUnion, cost is involved. So some lenders may choose to only use one service instead of all three. But then, that's really, at the end of the day, not accurate information as far as, if you're not reporting positive information or negative information, it impacts that individual's credit. But you're not obligated. So, that's up to you. But the important thing is consistency. So if you're reporting to all three agencies or two agencies, that you're reporting the same information to each agency that you're reporting to. So hopefully that answers your question there.
Thank you, Joey.
A little bit long.
That's all right. This will be a toss-up for anybody who wants to take it. Kristen mentioned that they are getting a lot of stolen checks being deposited for new accounts, but they're not on us checks. What can they be doing to help identify this loss for them?
I'll take it, Ann. Okay, and Zach, if you want to jump in too. These are checks, they're coming in, how I understand the question, they're coming in and they're being deposited over the counter. And they're not drawn on the credit union or the financial institution that they're being deposited at. One key solution, and again, we have a partnership with Advanced Fraud Solutions. They offer a solution called TrueCheck. And that what it does is it goes out to behind the scenes. It looks at early warnings, just FYI. And if you're not the first one in the attack, it should give you a warning to say this check was already, I think there's like 40 different responses that will come back, but they'll tell you right at over the counter. It will also address at the ATM, remote deposit capture. So this would be checks not drawn on your member's account. So they would be the office items. So it goes out to all of these the DDA accounts to see if they've already been reported for fraud. So the question there, I would want to know, the person that asked the question, are you using TrueCheck? And if you are not, that might be something to check into and talk to them to see if they could have prevented those exposures. And we can talk about it offline too, but I would say that's a key solution there. Also, like Zach, I don't know, check holds, the 30-day or beyond.
Yeah, using that 30-day check hold for a new account. And then after that, as Zach mentioned, the exception hold is available to you as well.
Yeah.
I think it looks like someone recently just chimed in saying they have individuals who come in on a Friday afternoon to open up a new account and then get an instant issued debit card. Then they go to the ATM and they're depositing a whitewash check. And once the hold clears, they use the funds before Monday. We have placed longer holds on our new member ATM holds and stopped instant issued debit cards on Friday night for new members. But once they get the normal debit card in the mail, they could end up doing the same thing. So do you have any suggestions on how to notice this for new accounts? They use check systems and their credit reports, everything's coming back clear.
This is Ann again. Like I said, TrueChecks through Advanced Fraud Solutions, they can, flip the switch for those ATM full deposit pieces of equipment. So they will look at that deposited item. And I agree with what the credit union's doing with the instant issue. I would limit the amount of funds that are available for a short period of time. I don't know if the credit union that asked the question, if they're using Qualifile, for new account opening. That might be another solution, but new account fraud, and it sounds like they're coming in the branch and not doing it online. That's what it sounds like, because they're getting the instant issue card. But I would limit the dollar amount, how much money they can get out until, maybe there's a window there, before they're able to get, usually on a new account, limit the outgoing daily dollar limit. Zach, anything you want to with new accounts?
Another suggestion there might be limiting services for new accounts. So maybe having a probationary period of 60, 90, or 6 months before a member qualifies for ATM deposits and RDC, just because you don't have any rapport with them. So you want to build the relationship, figure out what their banking habits are, so that way you can have a little foundation of trust.
And this almost sounds like maybe like a money mule situation. So I've heard from credit unions that they target especially students, college students, to make some fast money. So, the college student or whoever it is, they have a good credit report and they're good with check systems. So they're perpetrating this fraud and, collecting a portion of it and giving a portion of it to the leader of the pack.
I've learned my lesson. I'm going to just call one of you out this time. Zach, James wants to know if there's best practice to identify synthetic ID fraud.
Yeah, so like I mentioned, the Federal Reserve does have an excellent training tool that they can look at for new accounts if you have suspicions of new account synthetic ID theft. It also gives you some training on throughout the collection process, just looking at different credit bureaus. I would definitely check that out.
And this one will be for you. What do you mean by green, yellow, or red path on card not present fraud?
Great question, and thanks for asking. When you do 3D Secure, which formerly verified by Visa and MasterCard Secure Code, Discover now has a solution as well. But what it is, it's the green path is more of a weaker path of authentication. So I would encourage all of you on this call today, find out, are you authenticating that online card holder? Are you going down a green path? Which, and then if you are going down the green path, what authentication layers are they utilizing to authenticate you, Brandon? Or are they going down the yellow path? And is that more authentication layers, to authenticate you, or the red path? So is your fraud coming in, and because you can't charge it back a lot of times because it says, oh, you, the credit union, as the card issuer, you authenticated the card holder, and then subsequently you authorized the transaction. So if you're authenticating someone, why is it getting through? So that's what I would do, is all of you on the call today, find out, are you set up with your 3D Secure with green path authentication, yellow path authentication, or red path authentication, and then find out what layers are included in those authentication tools. Are you using biometrics? What layers? I know the green path, that doesn't use biometrics. So if you're seeing a lot of fraud there with 3D Secure, you really need to kind of peel that back and find out what your authentication layers are. So that's the 3 that I'm aware of.
Well, I'm sure Kathy will say thank you, because she typed in that they're getting killed with card not present. So this one's going to be for you, Joette. Do you have any suggestions or site suggestions for training on Reg E?
Yes, I might ask Ann for this. As far as I know that there's information on the NCUA's website, and sometimes there have been some training sessions through the corporates. And as far as some of the trade associations, there have been some. So offhand, I don't. there's nothing that I can think of. Maybe I'm going to ask Zach too, because Zach worked for a very large credit union in Central Florida, so he may have some information on training that his previous credit union had participated in. Zach, would you be able to help on that question?
Yeah, absolutely. I got a lot of training through NAFQ with their on-demand webinars and their compliance sessions. Also, the CFPB's website is a good resource for those kind of questions.
And this is Ann. I just wanted to chime in with Reg E. You know, it may apply to cards, but it may not, because remember, Visa and MasterCard push out that zero liability. So look at your disclosure. I would encourage all of you to look at your EFT disclosure to see what it says in your disclosure as far as Reg E, and then also ACH, you know, that the 60-day return right under ACH debits, if it's unauthorized, that falls under that as well. Right, Zach?
Yes, ma'am.
This will be a toss-up. This one person typed in, we recently had a consumer file disputes on Venmo transactions and Mercari transactions. She uses Venmo regularly, but stated to me that she knows that she didn't do the ones she is disputing. Do they have to honor the dispute?
The question, a great question. My question to the person that asked it, was it done ACH or was it done with a card? Because remember, Venmo can be done online or it can be done with the downloadable app. So it depends on, you know, if it's a card, that's considered a card not present under Venmo and you can charge it back under the chargeback rights. But if it's ACH, then the question is, was it done through online banking and who signed into online banking to send that ACH credit out? Or did they do the ACH with the routing and account number with the downloadable app? So to really answer that question, we would need to know, you know, what type of, how did the transaction flow? Does that make sense?
Sure. Well, it looks like they may have typed back in card. I don't know, they didn't use their name, so I don't know if this is anonymous.
Okay.
Same anonymous
Okay.
as the other anonymous.
Yeah, so if it's card, if they use their card and they did it when they download the Venmo app, find out if your member actually typed in their card. If the member is saying they did not type in their card and it's unauthorized, then I would use your chargebacks, and it went through that merchant category code, money transfer 4829, and I would attempt the chargeback back to Venmo to see if you can recover. Hopefully that helps. Let me know the outcome.
I'm gonna get another one in before our time is up. We have a fraudster who's currently in jail, but who has a genuine driver's license that has our member's name and number. I've told our member that, in my opinion, the best thing for him to do is move his business elsewhere. The police have verified that the driver license was issued by the DMV. Any thoughts?
I have talked to credit unions. I don't know if this credit union is in Florida, but the DMV was actually broken into, at least one, and the machines to create these cards were stolen. So I did hear from a credit union that legitimate driver's license were made. So, I mean, in this situation, I don't, you know, I mean, he would have to file a police report and handle it that way.
Okay. Well, I think this is Caitlin's nice way of saying that we're out of time. Either that or she was tired of looking at my picture up on screen. I apologize. Everybody else had to deal with that. But do keep in mind there's various ways that you can get in touch. Obviously, you can email directly the risk managers that were here today. but there's various ways that you could also look at the resources that Allied provides as well. So you'll see here the various websites and social media means that you can contact us. Please do continue to tune into these. We're doing them every other month, and we look forward to seeing you again next time. Thank you, everybody.